Even an old idea can be revolutionary when applied to a new context. Hey, somebody should put that on a fortune cookie. I like that. Let me give you an example. In the stock market, electronic trading platforms, they've been around for decades, right? There's no longer anything special about the idea of logging in to, say, E-Trade to buy and sell stocks. However, you might not realize that the bond market is a totally different animal. Every time a company or a government issues bonds, they're creating a whole new security, which means you have lots of different products, but each one has far fewer holders than a big liquid stock. Now, that can make liquidity hard to come by for the bonds. And without liquidity, it's hard to trade electronically, which brings me to MarketAxess, and the symbol here is MKTX. It's an electronic trading platform that's trying to make the bond market more liquid, thus making the whole experience simple for traders. And I got to tell you, I think making more money for the client. MarketAxess provides institutional fixed income investors with a marketplace that's not controlled by the big Wall Street firms. If what I just said puts you to sleep, oh, give me a break. Get this. Stock's up 37% year to date, on top of a 32% gain last year, and the most recent quarter is very strong. If you bought this thing when it came public, you made a fortune. So let's take a closer look with Rick McVey. He's the founder, chairman, and CEO of MarketAxess. Get a better sense of how his company is transforming the bond market and where it might be headed. Mr. McVey, welcome to Mad Money. Good to see you.
Thank you, Jim.
Right, Rick, you're one of these guys that everyone tells me, when are you going to have more? When are you going to get them? So I'm thrilled you're here. Now, a lot of our viewers are not bond traders. So perhaps what you can do first is introduce our audience to what you guys do and why it's so important, because it really is revolutionary from when I was in the business.
Yeah, great. Thank you. Well, we are a fintech company. And we build technology solutions for the institutional bond markets.
Okay.
And we run an electronic marketplace that's adding efficiency and reducing transaction costs for the global bond markets.
Now, but how does that necessarily provide the other side of the trade, so to speak, if I have a security that is not trading that much?
Well, it's a fact in the bond markets that turnover is a lot lower than what you're used to in the equity markets. But we've done that by creating the broadest liquidity pool available in the global bond markets, with a network that now includes 150 dealers and over 1,100 institutional investor firms that can all trade with each other on the MarketAxess network.
Okay, so people are going to say the stock's done very well, but how do you guys make your money if you're just a kind of a go-between?
Well, we make our money through transaction fees for the trades that take place on our system. So it's really a volume-based game. So as more and more share of the market starts to move electronic, our volumes go up, we earn transaction fees. That drives our revenue growth.
Okay, so one of the things that I think that this sounds like to me is you're basically digitizing the bond market instead of just guys making phone calls looking for buyers and sellers.
It's as simple as that, Jim. We've created a marketplace that makes it much easier to trade bonds. We promote price transparency, greater competition, better bond choice, so there's more trading opportunities on the network, and all the while driving down transaction costs.
Okay, so how about if I have bonds from an emerging market? Do you do those too?
We absolutely do. We've really focused on the hardest markets to move electronic.
Okay.
So when we started the company 18 years ago, government bonds had already started to move electronic. They're the most liquid market in the world. We focused on the less liquid sectors. So our primary markets are investment-grade corporate bonds, high yield, and emerging market debt.
Could you ever, because it's what on everybody's mind, could you ever, if you decided tomorrow to make a Bitcoin exchange?
Well, it's not really in our wheelhouse. It's
not a bond market, right.
So I think it's better suited for the exchanges that trade foreign exchange and other more liquid markets.
Okay, so give me what do you think is the health of the market right now? And today interest rates went up. But I think is it a bubble? There's such low yields. And I never tell people to buy bonds.
Yes, I think 2018 is going to be a really interesting year for the bond markets. And quite frankly, we've been growing in spite of the fact that we've been living in this very low yield, low volatility environment. And as you know, we've been through unprecedented monetary easing and quantitative easing with massive amounts of balance sheet expansion by the Fed, the ECB, and the Bank of Japan, driving rates down to help spur economic growth. But the short answer is that has worked, and we're now seeing better global growth numbers than we've seen since the crisis. Central banks are starting to reverse those policies. Rates are starting to rise, and we have a lot of debt out there.
Right.
Corporate bond debt is about double what it was 8 years ago because of the issuance environment for corporate treasurers. So I think it's going to be a very interesting year as rates start to rise and normalize over the coming quarters.
One last question. I know we always hear from the big brokerage houses that fixed income's not doing that well because there's not a lot of volatility. When I look at your numbers, you're doing quite well. What are they doing wrong that you're doing?
Well, you know, ours is not a volatility or trading business. It's really about how can we move market share that has been trading by telephone to a more efficient global electronic marketplace. And each year there's more share heading in that direction. The exciting part is that in our largest market of high-grade corporate bonds, the estimates are that only about 20% of that market is electronic today. And when you look at emerging market debt and high yield debt, it's only 8 or 9%.
Oh, you got plenty of room.
So we think there's much more to come.
Well, it's a great story, it really is. And for those who, I used to trade bonds, I had to get guys on the phone to get 6 different offers. And you know what it was like? It's terrible. You're solving that problem. Okay, that's Rick McVey, founder, chairman, CEO of MarketAxess, MKTX. They are providing a real service for people who trade bonds. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.